Ladies and gentlemen, good day and welcome to the Q1 FY23 earnings conference call for Action Construction Equipment Limited, hosted by PhillipCapital India Private Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this call is being recorded. I now hand the conference over to Mr. Vikram Suryavanshi from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Thank you, Faizan. Good afternoon and very warm welcome to everyone. Thank you for being on a call of Action Construction Equipment Limited. We are happy to have management with us here today for question and answer session with investment community. Management is represented by Mr. Saurabh Agarwal, Executive Director, Mr. Rajan Luthra, Chief Financial Officer, and Mr. Vyom Agarwal, Head Investor Relations. Before we start with the question and answer session, we'll have opening comments from the management. Now I hand over call to Mr. Saurabh Agarwal for opening comments. Over to you, sir.
Yeah, good afternoon and welcome everyone to this earnings conference call for discussing the results for the quarter ended June 22. Along with me in today's earnings call, we have our CFO, Mr. Rajan Luthra, and our Head of Investor Relations, Mr. Vyom Agarwal. I hope all of you have had an opportunity to look at the company's financial statements and the earnings presentation, which have been circulated and uploaded at the stock exchanges. In the current quarter gone by, the external signals were mixed. We entered the quarter with strong demand, but due to higher than expected inflation and the macroeconomic headwinds, there was a moderation in demand as the quarter went by. We at ACE took these uncertainties as opportunities and have moved forward with the intent which reflects in our best ever quarter one performance in terms of revenue and profits. To brief you on the financial performance of the first quarter of financial year 23, on a yearly standalone basis, the operational revenues grew by 55% approximately to 501 crores with an EBITDA margin of 9.3%. The EBITDA during the quarter increased by 42% to rupees 46.23 crores. The profit before tax grew by 51% to 39.51 crores and PAT grew by 49% to rupees 28.85 crores as compared to last year's corresponding quarter. The PAT margins now stand at 5.8% for the quarter on standalone basis. Due to one-time exceptional income of about 19.8 crores, the consolidated profitability numbers have increased to 12.55% at EBITDA level, totaling to 65.6 crores and 8.67% at PAT level, totaling to 45 crores. Moving on to the segmental business performance. For the quarter gone by, our cranes business has registered a growth of 58% year on year. This is on a low base of last year, especially of April-May 21, when a large part of the country was severely impacted due to COVID-19 second wave. In this segment, we have sustained our margins at around 11%. Further, as compared to the last corresponding quarter, the construction equipment segment clocked a growth of 42% and we did a revenue of 52 crores with margins of around 4.5%. The material handling segment recorded revenue growth of 15% and stood at 38 crores with margins at 11%. The agri division registered revenue of 59 crores while recording margins at 2.5%. With the expectations of a good monsoon and a likely record kharif crop yield, we expect tractor industry to perform better in the current year as compared to last fiscal. As anticipated and conveyed earlier, inflation worsened during the last quarter and prices of many commodities went to their all-time highs during the quarter. Despite this, we have been able to hold EBITDA margins at a reasonable level due to our clear focus on fundamentals of investing in our products and giving better value to customers. And we continue to calibrate our pricing actions and the most important thing, to drive savings harder and optimize all costs through a frugal mindset and growth leverage. On the operational side, in the last quarter, the company was awarded with a contract to set up a state-of-the-art assembly plant for manufacturing of tractors, backhoe loaders, and fabrication of agricultural implements for the government of the Republic of Ghana, against a consideration of $24.98 million, which is approximately 200 crores. The said contract is secured through a credit agreement between the government of Ghana and the Export-Import Bank of India. The project will be owned and operated by the government of Ghana. The project involves designing, engineering, commissioning of assembly supply lines and supply of plant and machinery for the manufacturing, in addition to transferring the technical know-how, establishing best-in-class manufacturing processes and quality control systems, along with the training of engineers and technicians from the Republic of Ghana for future operations. The manufacturing unit will be designed for an installed capacity of 4,400 tractors, 600 backhoes, 600 agricultural implements, and 300 tipping trailers annually. The contract also includes the supply of an initial pilot lot of tractors, backhoes, and agricultural implements in CKD form for the assembly lines for manufacturing. Subsequently, after commissioning of the plant, the prices of CKD kits shall be applicable as per the prevailing market rate at the time of supply. On completion, the project will play a vital role in opening up of export markets in Western African region for our products and augmenting the company's export efforts. Further, in our endeavor to work closely and effectively with the Ministry of Defence, in the last quarter, we got a breakthrough order for supply of about 40 backhoe loaders for Order Road Organization, Ministry of Defence, and the same shall be supplied during the current quarter. In addition to that, we continued executing the pilot order of 4x4 multi-purpose tractors along with special attachments, which was specifically designed for the Indian Army. Going forward, inflation continues to be a significant challenge. As you can see, market prices of most of the commodities have increased sequentially in June quarter and were at very high levels. But the recent softening of commodities, especially steel, due to policy decisions, augurs well for us, and if this stays, it will positively impact our sequential margins from quarter 2 onwards. Needless to say, we will continue to extensively drive productivity improvements in our business and take calibrated pricing actions. Further, the board of the company has approved appointment of KPMG as the statutory auditors, subject to shareholders' approval. With the current focus of government towards infrastructure development and efforts to strengthen the manufacturing sector, we expect a growth of 15 to 20% in crane and agri segments for the current year, and a 30-35% and 20-25% growth across our other two business segments, that is construction equipment and metal handling. On the whole, we are looking at least 15 to 20% increase in our top line for the current year with better EBITDA margins. We hope that we are in a position to revise these projections by end of second quarter, which will predominantly depend on how the macroeconomic and inflation scenarios pan out. We remain optimistic about the medium to long-term prospects of the company and believe that our building blocks are firmly in place and are on path of sustainable growth in all the four segments where we operate, leading to expansion in top line, bottom line, and margins of the company. With this, I would like to request the moderator to open the call for question and answer session. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, Anyone who wishes to ask a question may press star and one at this time. The first question is from the line of Himanshu Upadhyay from O3 Securities. Please go ahead.
Yeah, hi. Good afternoon. Am I audible?
Yeah. Good afternoon.
Yeah. Congrats on good set of numbers. My first question was on acquisition, okay? Is there any probability that those acquisitions which we were targeting will happen, or it is now a low probability event looking at the situation and the market conditions, what they are?
Recently we have concluded two aspects, two things rather. One, we have taken over a new startup crane company to operate in the price sensitive, zone, the lower zone of the market. So that activity has been completed and the operations has been taken over totally. And secondly, another company, a much smaller company operating in the pick and carry cranes and the tower crane segment especially. We have also taken over that company and it is operating under our fold as of now. These two things have happened in the last 1 to 2 months.
So have we bought these companies or we will be running these companies?
No, for the first company, we have taken over the entire shareholding of company, and it is a 100% subsidiary of ACE, nearly 100%, I think 99.99. And obviously, we'll be running that company in the bottommost space of pricing with respect to French place. And for the second company, we have taken over their business and their business and assets, and have started operating that at a different location. Yes.
So both these companies are manufacturing companies?
Yes, both of them were manufacturing companies. Yes, operating in the crane space.
Okay, but the price points would be lower and.
Yes, alternate brands at slightly lower prices. So basically, out of the 3-4 Finnish players, 2 have been in a way eliminated as competition for us, and they will take care of the balance 1 or 2 which operate in the market at a lower price point.
And generally, what is the price discount between us and these lower players or the lower end of the market where we want to cater to?
Can be anywhere between 5 to 10%, in some cases even more.
And they will be a separate brand? They will not
separate
be
brand, totally separate brand, not ACE brand at all.
And the distribution structure would be what for these companies?
It is not going to be pan-India. These companies are on regional levels or area levels. So distribution is generally through some company staff and some small dealerships. So they will continue to operate the way they were operating.
Okay. So what would be the synergies which we bring to the table in these two companies?
I would say nearly half of the lower end of the market is with us now. And with the help of these companies, we will also take up the balance half. So over a period of next 6 months to 1 year and going forward, this will help us in, improving our pricing capability in the market with respect to the current costs of our operations as well as inflation, which is very jittery as of now. This will give us pricing power going forward.
But in terms of cost of operations, would they also reduce because many of the parts we are already manufacturing, okay? But,
that is also one of the main reasons that these companies will be able to reduce their costs and would eventually start making profits, even the smaller companies. Yes.
And what is the size of these businesses in terms of revenue?
I think 10-15 crores each. One of them would be, it will reach about 25-30 crores, and one of them would be 10-15 crores.
Okay. And one thing, I was just looking at the Sangvi Movers results, okay? And we are seeing that a lot of crane rental companies have started going for capex. Okay, they are also giving or in the market to buy more cranes, and they have also given a projection of 9 to 10 pick and carry cranes. Okay, so are we seeing the crane renters starting to buy or become more aggressive for the capex in the market? Is inquiry level significantly higher than what we would have seen in last 3 years?
The inquiry levels have been high in the last 1.5, 2 years, and I would say especially between December, January to April this year, the situation was very bullish. But due to this unprecedented inflation and interest rate hikes and overall sentiment in the economy, the inquiries and order conversion did dip in the months of May and June, and even in July, I would say. But it looks like that things are back on track. And definitely with the growth in infrastructure which is happening all around, and also coupled with the growth in manufacturing sector leading to establishment of new factories and expansions and whatever. So we see that these rental companies, their requirements, because about 50% of our business is indirectly to rental companies. So all of that is definitely increasing and will increase further as the sentiment and the overall economic outlook further improves from here.
Okay, I have few more queries. I'll join back in the queue.
Yeah, okay.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Devesh Kasliwal from Antique Stock Broking. Please go ahead.
Yes. Good afternoon, sir. Actually, I had a query regarding the exceptional gain, the other income gain that we had by selling the land for around 19.8 crores. So if you exclude that, we see an EBITDA margin of around 9.1 to 9.2%. So is this drop, like it's around 100 bits drop year on year? So is this because of the commodity prices increasing, or is there something else to be concerned about?
Yes, our EBITDA margins at around 9.3% for this quarter, as compared to 10.1% on a year-on-year basis, drop of around 80 basis points, primarily due to inflation and commodity prices, because there was havoc last quarter. It started to ease in June, and as a matter of fact, anticipating this havoc, which had actually started in March, we did increase our prices on 1st of April for most of our products in the range of 3 to 4%, which did help us offset some of this. But yes, it is primarily because of totally unprecedented inflation that we saw in the last quarter.
So for the entire year, we are expecting the margins to be double digits only, but then not as per what it was last year, or it might even cross the last year's margin.
Hopefully in quarter 2 itself, we should see double digits. And on a last whole year basis, we take about close to 10.2, 10.3%. Last year margin, with the commodities now eventually cooling off. But here I would like to add that, unfortunately, yes, steel prices have cooled off pretty well, about 15-20%. But in steel prices, this is mainly to do with plates. Long products have gone down only by 10-12%. And unfortunately, castings and alloy steel, there has hardly been any price reduction. So within steel, there are segments we have seen price reduction, and where we have seen less price reduction and hardly any price reduction. But on the whole, I can say yes, it has gone down by at least 10-12% with respect to the steel spectrum of different things that we use.
Okay. And another thing that I wanted to ask, I don't know if the ICMI has yet released the report, but like last year, you had given the overall industry marketable size, addressable marketable size for us. Like for the crane segment, it was around for 1,300 crores. So do you have the data with the total market, what it was for FY22 overall?
Not as of now, but we can definitely provide that data to you. What happened, but FY22 we have our numbers, I'm sure, as of now, what we did.
Oh yeah, okay. So you have the market share overall, like.
Yeah. We are, we keep on revolving as of now between 63 to 65% market share. And I'm sure even in the last quarter we were at about 64-65% market share with respect to pick and carry cranes, and even higher than 65% with respect to tower cranes.
Okay. Not a problem, sir. Thanks a lot for that. Congratulations on the set of numbers. Thank you.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Chandrika Venkatesh from Rika Enterprises. Please go ahead.
Hi. Thank you for taking my question. I have 2 questions.
Yeah.
One, you have set a target of 2,500 crores of sales by FY24. Is the target still valid, or are we going to take more time to reach there?
So can you repeat your question? Target of how much for what?
Repeat the question. Okay, we have set a target of 2,500 crores of sales by financial year 24. Is the target still, is the guidance still valid, or are we going to take more time to reach that target?
I think with cooling off of commodities and slight, inflation coming under control and sentiment being neutral, we are very much on target to achieve 2,500 crore sales by FY24, which we had set for ourselves. As of now, it appears we are totally and very much on the target, to achieve it.
Okay. My second question is, we have not been very successful in backhoe loaders, despite our optimism about the same. Our construction equipment sales are only around 200 crores per year. You have given a guidance of 500 crores by FY24. Why are we not so successful in backhoe loaders, despite having the advantage of cross-selling? And will we reach the target of 500 crores of sales by FY24, or will it take longer?
Somehow it has been very unfortunate. Even in the last year, the overall backhoe industry degrew by 28 to 30% in number terms. And unfortunately, again, in the first quarter of this year, the backhoe loader industry is down more than 30%. I don't have the exact number, it should be somewhere between 30 to 40% year-on-year basis. So, looking at that, we were really not able to grow in the last year on backhoe, and our last year our segment revenue was at 176 crores. But we are very hopeful that we'll grow this segment by 30-35% in this year, looking at our order inflow, backlogs, whatever. So that will take us to anywhere between 225 to 250 crores. Yes, there is a question mark that we might not be able to attain 500 crores by FY24, and we might get stuck somewhere between 300 to 400 crores by FY24.
Thank you. We'll move on to the next question from the line of Surit Deora from Paladin Capital. Please go ahead.
Yeah, hi. I have 2 questions. One is this on the backhoe loader. You mentioned that the market is down 30 to 40%. What is the reason for that?
See, what has happened last year, April, when BS4 kicked in, till September, you were allowed to sell the stock which you had in March. So people, made extra, most of everybody made extra machines, and the pricing effect because of BS4 totally did not trickle in for the first half of last year. But then with the prices increasing drastically because of BS4 engine transition, coupled with other inflation, whether in steel, whatever, so the price viability of the machines with the rentals hardly going up is a question mark. So I think that is one of the main reasons that backhoe has been suffering for the entire market rather. We definitely increased our numbers last year. We will increase our numbers significantly this year also because we have a much smaller base. But overall, as an industry, it has been suffering on account of, exceptional price increases because of BS4 and commodities, vis-a-vis the rental revenue. And about 75-80% of the backhoe loader market is based on rentals and retail. I think that is the main reason that the business viability is slightly suffering. But yes, with continued increase in activity, sooner or later will come a stage that the rentals will have to increase because the market, there is definitely requirement of backhoe loaders. So as soon as the rentals further increase by 10, 20%, 25% from here, the viability will be back again, and then the ball should start rolling. So I expect that it should start to happen Q3, Q4 onwards this year.
Okay. And the second question was that in exactly a year ago, I think in September last year, you were done the QIP for 120 odd crores, and I thought the purpose of that QIP was to make acquisitions. But it sounds like the acquisitions that you've made are substantially smaller than the amount of money raised. So could you share your thoughts on that?
Yeah, currently we spend close to anywhere between I think 12 to 15 crores as of now, and 2-3 other things are on the anvil. They are taking time, so which are definitely bigger than this, reasonably bigger than this. So that's all I can tell you, that we have created our war chest for these acquisitions, which would help us significantly in our bottom line. And hopefully, I really can't say 3-4 months, 6 months, 7 months, but yes, we are on track. Things are happening.
And those acquisitions are getting delayed because of pricing negotiations or some other reason?
Everything put together, because the situation is so jittery, and the even less the balance sheet and numbers of it's very difficult to negotiate in a scenario when your results are changing so quickly with respect to what you want to acquire. Obviously, coupled with certain other regulatory things. See, I really can't discuss much in detail, but I'm sure at least one of them should go through in this year.
And when you think about your 2,500 crore turnover target, what part of that will come from inorganic growth?
Nothing. That has been calculated without this.
So 2,500 crore is your organic growth target from the level that you are today. So if you make an acquisition,
yes,
this thing could be sizable, and by sizable I'm guessing at least 200-300 crores of revenue. So that will be over and above 2,500.
You can say that, but I think one of the acquisitions is backward integration, so that will affect us more in the bottom line than on the top line. So it could be 80-100 crores on the top line and definitely benefit on the bottom line.
Okay, fine. Thank you.
Yeah, welcome.
Thank you. The next question is from the line of Himanshu Upadhyay from O3 Securities. Please go ahead.
Yeah, see, this construction equipment, we have seen, means for us at least YOY some growth is there, and even Q on Q.
Mm-hmm.
So what percentage of this would be from backhoe loaders, or they are stagnant for us? Can you just elaborate on how much of this is backhoe loader and
20%, at least 15-20% would be from backhoe loaders. And I'm sure in this quarter you'll see backhoe loaders contributing much more this quarter 2 and quarter 3 further. Or 15-20% of this growth would be from backhoe loaders.
Okay. So it is moving, the product is moving though at a slower pace than what we expected.
Yes, unfortunately because of the overall backhoe loader market size, although we are a smaller player, but when the market contracts by 25-30%, everything gets affected. And that's the reason. But last year also we were able to grow, and I'm sure this year again we'll be able to grow at least 30-35%. But we would have thought the pace of growth should have been faster.
Okay. And one of the challenges what we faced few years back in agricultural equipment was the dealers were not profitable when the cycle turned, okay, and that impacted us very negatively. But what is the situation now for agricultural equipment and even construction equipment?
Construction equipment, there is no real problem as such because 60-70% of the dealer network is common with cranes and also common with material handling, so their basic viability is definitely in place. And for agriculture, yes, the cycle turns and things happen. Some dealerships do get knocked out, but as of now, the number of dealers that we have and operate with are financially sound, reasonably good dealerships. And going forward, of the addition of these dealerships is also happening. So I'm sure even the agriculture segment will turn around soon.
Okay. And one last thing on the material handling equipment. Okay. So what we hear is a lot of manufacturing activity getting started. Okay. Or some new factories getting spot. Okay. Are we seeing those sentiments being positive on the material handling equipment or the inquiry levels, or you don't see something of that sort? Because the numbers have been flattish or downward, okay, YOY and Q1Q both in the material handling. So can you elaborate what is happening in the market on that side?
The industrial segment and the manufacturing segment, whenever the overall economic outlook is a little bleak, are the first to react, and that is what you see. So on a year-on-year basis, we've been able to grow only 14% there, and nearly flattish on a quarter-on-quarter basis. But if you look at our last year, FY22 whole year, vis-a-vis FY21, you will see a growth of around 47-48%. So I'm sure with the economic sentiment improving, quarter 3, quarter 4 would be pretty good, including maybe even quarter 2, but especially quarter 3, quarter 4 for metal handling. So that sentiment and the buying decisions and everything just gets suspended. That's what happened in the last 3-4 months.
And one last thing, on the defense side, we had given thought that we should be in triple digits for this year, okay, FY23. So we continue to maintain that, and that we will reach to that number?
In this year, yes.
And anything else than what orders we have got, backhaul orders for defense? Anything else we can do specialized in the market where the entry barriers are high and we can get better value addition?
Yes. In the last 3 years, we've been working very closely with Indian Defence, and as a matter of fact, one of the orders, rather 2 of the orders which are under execution as of now, are special purpose, specially built cranes for missile handling systems. One of them is called MRSAM, Medium Range Surface to Air Missile System, wherein these cranes were earlier only imported into our country. And we have developed these cranes and already started supplies to Tata Defence Systems and L&T Defence, Tata Advanced Systems and L&T Defence, and also DRDO. And also a very specific type of crane which has gone to the Orissa missile firing ranges. I cannot give you more details for the bigger missiles for loading and unloading activity. So all these special type of machines being required. Rather, I think in the last quarter we announced that we got an order of around 482 multi-purpose 4x4 tractors. So these are purpose-built 4x4 tractors, not standard 4x4 tractors of a slightly higher horsepower, I think 74-75 horsepower, with 3-4 specialized attachments only for the army application. So yes, we do continue to work with them on specialized machines and requirements.
Okay. Thanks from my side, and best of luck for the future.
Yeah, thank you.
Thank you. The next question is from the line of Tanuj Khiani from Kamayakya Wealth Management. Please go ahead.
Thank you for the opportunity. I just had one question regarding the contract with the Republic of Ghana. How much could the revenue potential be?
See, in FY23 and FY24 put together, the initial revenue would be to the tune of 200 crores. Maybe 20-30% coming in this year, and the balance about 70-80% going into the next year. That is the initial potential. And post that, we do have a revenue potential of anywhere between, I can say, 150-200 crores to 400 crores on a yearly basis, on account of supply of CKDs and SKDs for the machines which are going to be manufactured there. So that is the potential currently.
Okay, thank you so much.
Yeah.
Thank you. The next question is from the line of Devesh Kasliwal from Antique Stock Broking. Please go ahead.
See, actually, I had a question regarding the export potential that we have.
because of the Russia,
Sorry to interrupt you,
Ukraine.
Mr. Kasliwal. Please use the handset mode. The audio is not clear from your line.
Okay, sorry. Yes.
Yeah. Is it clear right now?
Much better.
Yeah. So I was just asking about the export potential. Like last year, we had an order from Bangladesh for the export on the export side, and we launched two separate types of products. One was the Forma range of tractors as well as the Phantom, the backhoe loaders. So we actually could not do what we expected because of the Russia-Ukraine crisis. So what I was asking over here is like this year, what is the overall potential that we have from the export segment, like as a percentage of revenue, as well as because it's a higher margin, like we gain a lot of margin on this more than what we do in the domestic field. Is there a potential that overall our margins might look better with this in place?
In FY21, we did 64 crores of exports. In FY22, we did 75 crores of exports. And I am very hopeful that in the current year, we should be able to exceed 100 crores sales. So it is on the growing trajectory, and things seem to be moving on track.
And both the products that we have launched have been getting a good response.
Yeah, the machines are doing well. Things seem to be on track. We are also opening up some more geographies and focusing on the ones which we had opened in the last 3 years. So unfortunately, everything got slowed down because of COVID and sort of international travel and things, and even demand scenario, everything was warped. But going forward, I think with COVID stabilizing globally, our export business should only look northwards. Yeah.
Okay, so as a percentage of revenue, it can go up to around 10 odd percent.
I think internally we have targeted 10 to 15%. On the minimum side 10 and on the higher side 15, and then we wanted to do that by FY24. But I'm sure we'll reach 10%. That's what it appears to be.
Okay. Yeah, that's it from my side. Thanks a lot.
Yeah.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Deepak Mehta, retail investor. Please go ahead.
Hello. Yeah, thanks for the opportunity and good set of numbers. So my question is, what is the utilization of our...
Sorry to interrupt you, Mr. Mehta. The audio is not clear from your line. Please use the handset mode.
Hello.
Yeah, much better.
Yeah. Good evening, sir. Sir, I wanted to ask what is the current utilization?
See, in the crane segment, currently we are working at 65 to 70%. Construction equipment, we are working at around 35%. Material handling, we are working 35% utilization in construction equipment. Material handling, we are working at about 65%.
Okay. And what's your outlook for this financial year?
Outlook with respect to our revenue growth and...
No, sir. For utilizations, I am asking.
I think going forward, Q3, Q4, cranes should reach about 75-80% utilization. Construction equipment should also reach about 50-60% utilization. Material handling, earlier we were doing 75-80% utilization, so I'm sure in Q3, Q4 we should be touching that. And agri, we are doing about 40-45% currently, so going forward I think we should be touching 50% utilization there also in this year.
Okay. Fine. Thank you, sir.
Yeah.
Thank you. The next question is from the line of Rajesh Jain from NB Investments. Please go ahead.
Good evening, sir. My question is, you have a very ambitious growth target.
Sorry to interrupt you. Please use the handset mode. The audio is not clear from you.
I'm in the handset mode only.
Okay, then you'll have to be a bit louder, please. Thank you.
Okay. Is it okay, sir, now?
Not really, but yeah, please go ahead, yeah, baby.
No, sir. What I just wanted to know is, with the increase in inflation and also the rise of interest rates, do you think the demand will get subdued since most of the customers buy the machine on credit or loan from the bank?
See, with inflation, definitely we would have thought demand would get subdued. But luckily, main inflation in our type of machinery started to go away, that is steel. So I think the sentiment is again turning towards a little positivity. And you see, 0.5%, 1% interest cycle here and there really does not bother our business or the retail or rental segment. So I think both these aspects. The first one is definitely more troublesome, that is inflation, which seems to be coming under control. And because of the interest rates, I really do not see anything negative happening.
Okay, that is very helpful, sir. My second question is regarding the construction segment. As of yet, we have around 5 products. For the growth target that you have kept for yourself, do we have to introduce any more new machines in this segment?
In this segment, obviously, the biggest product is the backhoe loader, where the potential to increase our numbers are enormous, and where we are definitely trying to work. And like I did mention that it has been slightly unfortunate that for the last nearly 1.5 years, or 1 year, let's say 15 months, the market has been very much subdued. But over the next 6 months to 9 months, we are evolving a couple of other products, and one of them is not made in our country and is currently being imported into the country and has a good amount of potential and much better margins, because as of now our country relies only on import of that. So these 2 products segments we should be introducing probably by Q4, if not Q1 of next year.
Okay. So my third question is regarding the Ghana project, wherein you have said that the revenue potential is, over a period of 2 years is around 200 crores, out of which this financial year we are expected to do around 30 to 40 crores. So my question is, after this FY24, what would be the revenue potential from there? That is one. And second question is, what is the margin expected from this business, sir?
See, once the plant is set up, which is expected to be finished by FY24, so FY25 onwards, like I mentioned, our revenue potential is anywhere between 150, 200 crores to 400 crores. And that is the capacity that is being set up. So I would say that averagely the potential should be around at least 150, 200 crores, if not more, but the potential is up to 400 crores, looking at the capacity that is being set up there, first thing. And definitely the margins there would be at least, I would say, 5 to 6% better than our current company level margins.
So that means at the company level we are doing around 10% or so, so it will be to the tune of 15% operating.
Should be at least.
And what you said is this is expected to commercial next year, so that means there will be no revenues from this during the current and next financial year.
In the current and next financial year, we will get revenues from setting up of this factory, because we are getting paid 200 crores to do this activity.
Okay. So that
revenue will come this year and next year, and from FY25 onwards, we can expect a steady stream of 150 to 200 crores at least.
Okay, got it, sir. Sir, my last question is about the agri segment. Most of the players have shown good sales after post-May or so. But somehow we have not got good sales in this segment. So how is this, the rest of the year is going to be?
If you look at our year-on-year sales, we have increased 98% on a yearly basis. If you look at revenue from 29-30 crores going to 58 crores.
Correct.
But on a whole year basis, we are, last year we finished with about 200 crores of revenue approximately. So I think by the end of this year, we should be somewhere around 240, 250 crores, at least a 20% growth here and there.
Okay. Thank you very much, sir, and wish you all the best.
Yeah, thank you.
Thank you. The next question is from the line of Jasprit Walia from Clockwise Capital. Please go ahead.
Good afternoon, sir. Thanks for taking my question. So this EPC contract that you have taken from the Ghana government, how do you, so is it a fixed price contract, hence the risk of commodity prices or any other costs going up is on you? Is that the right understanding?
Yes, but while quoting, and it is not purely an EPC, yes, you can call it EPC, because setting up a plant to manufacture this machine, but it is also coupled with training them and also providing the entire technical know-how of these products, and obviously the main components and aggregates and fabrication being supplied from India. So yes, the risk is on us, but all of that was put in place when we were, quoting, because the prices had already started escalating quite a lot in the second half of FY20. So luckily, we did price in a reasonable amount of inflation at that time.
Got it, sir. Got it. And sir,
hello, sir. I just want to add that when we quoted the dollar price was also much lower. Now dollar is at nearly 80 rupees, and when we did the costing, the dollar was around 70, 72 rupees only. So that advantage we are also getting on the price.
got it. So,
There is additional buffer because of our currency devaluing a little.
got it. So the pricing of CKD kits that you would be the price that you quoted for this plant is in dollars.
Yes.
Got it. And the pricing of the CKD kits that you will be supplying will be decided after 2 years, or has it been already kind of finalized?
If I am not wrong, initial pilot lot of 30, 40 or 50 kits, I don't remember. Do you have any idea? Do you remember? Okay, the initial pilot lot, very small lot, 30, 40, 50 units is already included in this 200 crores. But for the balance, the pricing will happen in FY24 once we commission the plant. Because to that effect, and obviously inflation and standard yearly increase has to be built in. Because we are already supplying some kits with the initial plant setup activity.
Got it, sir. Got it. And sir, this the currently the market of Ghana is being supplied to imports in the product segments that that you are setting up in this plant.
You see, that was the main reason. Ghana has some agriculture, some mining, whatever. They hardly have any manufacturing, and everything is being fed through imports, which are also expensive Western imports. So the government wanted to, create and evolve manufacturing. So they are doing it in different aspects of their economy. And they wanted to set up a tractor and a construction equipment backhoe loader manufacturing plant because these machines are used there in reasonable numbers. And that is the main reason everything started and it shaped up like this. And apart from that, they are also reasonably keen on making them in Ghana and supplying to their neighboring countries also.
Got it. And sir, on a ballpark basis, the pricing of these products is intended to be at what discount to imports?
The pricing of these products are intended to be?
So this would be supplied at a discount to the current imports price, right? So I was just wondering at what kind of discount would,
there will hardly be any discounts because generally as of now we do not export any CKDs or SKDs. We only export complete machines.
No, sir. In the Ghana market, what would be the price positioning of the products that would be manufactured from this plant?
It will be much better than what it is being currently sold. Maybe 30-40% lower than the current pricing point at which they are sold. And made there, because that benefit they are getting from, buying the kits from India at Indian prices and competing with the Westerners at, completely built machines there.
Got it, sir. Thank you, sir. That's all from my side.
Yeah. Okay.
Thank you. The next question is from the line of Aman Shah from GT Investments. Please go ahead.
Yeah, good afternoon, sir. Congratulations on good set of numbers, especially the maintenance of margins in this environment.
Yeah, thank you. It was a very, very difficult balancing act.
Yeah, I agree, sir, completely. Hopefully, I think on margins, since we start from Q2 onwards with softening of commodity and the marginal players that we have acquired, we should see, though you have guided for a double-digit margin, but we should see a strong support to our margins from here on.
Yes. I think Q2 onwards, second half of Q2 onwards, because a lot of inventories were still there in the beginning of the quarter. The margin profile will start to improve. We should see that benefit in Q2 and slightly magnified benefit in Q3 and Q4.
And because of this acquisition, structurally our margins would also be positively impacted by some basis points.
Yes. See, what was happening, about 10 to 15% of our sales in the crane segment was getting affected by these marginal players. But like I said, still some of them are existing, so they will be taken care of in the next 6 months, 1 year, 1.5 years. But definitely we'll start to see improvement in our margins because of what we have done in our tower crane business also, and in our pick and carry business also.
Okay, great. Second question was, sir, on construction equipment. If I heard you right, like year-on-year growth, which has been some 41%. Out of that, 15 to 20% is attributed to backhoe loaders.
Yes.
Okay.
Yes, approximately, yeah.
Okay. What would be the things that you feel would be required to bring this on a high growth path? Because we have good positioning of the product quality, our brand name is good, and pricing of our product is much better than the leading competitor. And I suppose we are going more of a centralized, means more of a concentrated distribution in region-specific area. Is there any change required, or what will it take to bring this in a high growth path? Because we are still very small player compared to the market size. Yet, because of the market swings, our sales are being affected.
See, आपने, to be very frank with you, आपने ना हमारी दुख की रग पे हाथ रख दिया है कि सब कुछ ठीक करने के बाद our product is right, our price is right, our service is right, our accessibility has been created, financials are in place, our brand is good, we are the largest in trade. And coincidentally, this is what we were discussing internally also 3 days back, that even we don't know why it is not on that path. Yes, in the last 1.5 years, we can definitely attribute it because overall, there is not such good momentum around this product category in the entire country. But I think we are ready, geared up, and all fired up. I mean, it's a matter of time. We can very, very pleasantly surprise even ourselves very soon. ये मेरे को लगता है. We are on the right track. We have done everything right, and whatever was possible to be done has been done in the last 1.5, 2 years. Whatever was possible, or any shortcoming, fallback, or change in approach, or whatever you can think of. So I think it's I do not know. We define luck as when preparedness meets opportunity. We are prepared. Opportunity is definitely there. So it's luck is going to happen. I'm sure.
No. It should happen when our product quality and pricing is better.
It will happen. Our product pricing is, even in the current rental prices, there is definitely viability for the buyers. So I think we are just round the corner, and I think I do not know which powers are, natural, supernatural. I do not know stopping us, but it's a matter of time.
I was just wondering, is there something which is non-pricing related decision? Maybe say repairs and spare parts available of the leading competitor every time.
Nothing. We have taken care of everything. We are similar or better in every possible aspect. Matter of time, and we are putting all our hard work, determination in it, and 70-80% of the race we have already run, so we have to put in our maximum energy in the balance part of it to become successful, because there is a very thin line between success and failure. So I'm sure that we'll be successful. We are still trying very hard, and we are on it.
Yeah. How much proportion of construction equipment is backhoe loaders?
Slightly tricky question to answer all of a sudden, but in numbers it is the biggest. So, for about, let's say, 80,000-90,000 construction equipment, about 40,000-45,000, nearly 50% is backhoe loaders, and about another 20,000-25,000 are excavators, plus 2,000-3,000 of some concrete machinery, whatever. So about 50% of the total construction equipment market in numbers is backhoe loaders today in the country. I'm not counting cranes in this.
Actually, I mean to say from our division, so that even will.
I think the overall market size you can easily multiply by 25-26 lakhs into 40,000-45,000, so it's about a 10,000-12,000 crore market.
No, sir. From our division of this 52 crore sales in this quarter, construction equipment, that's how much would that be?
Backhoe loaders would be about, I would say about 60-70% of this.
Okay.
Yeah.
Okay, sir. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Jaspreet Walia from Clockwise Capital. Please go ahead.
Hello, sir. Thanks for taking my question again. Sir, with Kubota taking over its court, have you seen a difference in the way they approach pricing for their various products in the market, or it's too early to be looking at those kind of things as of now?
Their approach towards pricing was reasonably logical and rigid in the first half of this year, to be very frank with you. And that is the way it should be, because unfortunately this division, construction equipment division of cranes division, really does not make any profits there. So they were reasonably firm with pricing, and there's a lot of inflation happening. But I think in the last 1.5, 2 months, they've again started to slip back on their pricing just to retain their market share or whatever. So, something which we've been seeing in the past. So, because I think it is being handled by similar set of people, and I really don't know, Kubota being primarily an agriculture company, so I do not know what is the strategy there, but yes, they were rigid, and things are going in the right direction. They are not rigid again. That's what I understand in the last 1.5 months.
Got it, sir. Thank you. That's all from my side.
Yeah.
Thank you. Next question is from the line of Deepak Mehta, retail investor. Please go ahead.
Hello. Yeah, thanks for the follow-up. So my question is around, government is pushing for infra, and real estate is also picking up. So in the best case scenario, what can be our utilizations of crane or assets, and what can be then asset turnover?
See, ideally we should have been the way things were in the second half of FY21, and again this war. I would say in the end of Q3 and Q4 of last year. I would have thought we should have been nearly at 90-100% utilization for cranes and about 70-80% for construction equipment. But after the war, the sentiment did go off a little, April onwards, May onwards. And I'm sure it will start to build up again. And if you look at our utilization and going full board, I think we can easily add about 1,000 crores of revenue from here onwards also by utilizing ourselves. So to reach a turnover of around 2,500 crores, 2,600 crores, we really do not need to do any significant CapEx.
Okay, yeah. Thank you, sir. And best wishes for your hard work and, continuous focus. Yeah, really appreciate it. Thank you.
Thank you. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
I think we've discussed most of everything, and I would just like to finish the call by reiterating that we are looking at a 15 to 20% growth in our revenue this year, with at least a double digit, if not slightly more, with respect to our margins. And definitely with the inflation cooling off, and especially steel, which is one of our main commodities. So we should expect at least 1.5-2%, maybe slightly more expansion in our margins on quarterly basis, especially Q3 onwards, but yes, definitely we some benefit in Q2 also. On the whole, our government is very much focused on developing infrastructure and infrastructure assets, and also increasing manufacturing in the country. And we are definitely seeing positive effects of that all around. So going by that, I think we are ourselves very much bullish on the medium to long term prospects of our company with increasing revenues as well as increasing margins. Yeah, I think that's it. Thanks a lot, everybody. Good evening.
Thank you, everybody.
Thank you. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.